Alright guys, so welcome back again to this channel. We're going to be talking about risk management um, as a forex trader. Yes, this is very important because this video is going to be answering lots and lots of questions involving risk management and how to become a profitable trader. Now I'm just going to say this: being a profitable trader doesn't necessarily mean you making profits 100%. It doesn't even really mean you making profit 90%. What it therefore means is that whatever it is number of trading you're able to do with a particular set of capital or amount of capital, you are still being able to maintain a given percentage of profit irrespective of the number of losses you have. That's what makes you a profitable trader. So quickly, let's delve into this because I'm going to be making this real quick and not too long. Take for example, I'm going to be using my calculator. So this is what it looks like. But before I bring up my calculator, this is what we are looking at here. Take for example, I have $100. This is what I want to. This is my trading capital. First of all, this is my trading capital, as you can see right here. And now, like I always say, when we talk about trading capital, the first thing that comes to your head is not the amount of lot size you want to use, or calculating all of your pips level and all of that. Before we start talking about all of those technical analysis and things you need to do to be able to make you get your account not being blown up, you have to first of all know what you want, how you intend trading this $100. Because the thing is, you're looking at, okay, a specified period of time, I should be able to triple this money, I should be able to double this money, I should be able to whatsoever. And you're not the market. The market doesn't even care about you. So the first thing that comes to your head is the number of days you want to trade this money. And so when we're talking about the number of days you want to trade this money, mind you, market opens on Monday, closes on Friday. So if you're telling yourself I want to trade this for 5 days, or you're telling yourself I want to trade this for 10 days, here's what the calculation is on the mathematical aspect is going to be. Like for example, I want to trade this 10 days. What you're going to simply do here in managing your risk, level, is a very simple thing. You're simply just going to say, okay, fine, I want to trade for 10 days. This is the number of days I want to trade. Hmm? This is the number of days you want to trade this particular, $10. Are we together? So let's get this real quick and let's work together so you see what we're talking about here. In $10, okay, let me make this real quick and easy for us. So yeah, I would say trading capital. So in this particular um trade I want to execute, my trading capital is $100. Then I ask myself, how many days do I want to trade this money? I want to trade it for 2 weeks, which is 10 days because we're taking out weekends. All right, I want to trade this for 10 days. The next thing that comes to my head is I would now have to perform the mathematical, the mathematics here. So I'm going to therefore say um, $100, $100 divided by 10 days. $100 divided by 10 days is going to give us 10. So what this therefore means is that this 10 now is going to be my risk. The 10 here is going to be what? Is going to be my risk. So um that's the formula. My 10 is going to be my risk. So what this therefore means is that for every $10 for every day I need to lose $10 or make beyond $10. So what is that for me? Once I hit $10, I'll go and sleep, or I'll go and rest, or go and find myself doing something else, or get out of the market, or perform other analysis. But I am not going to be getting into the trading for that day any longer. And so when we talk about um, $10 risk, Risk, for every risk there has to also be what we call a reward system. And what that reward system is, in this case, you should be able to make twice as much of whatsoever you risk, or 3 times as much of whatsoever you risk. Take for example, we want, in this case, I'm going to be, making, I'm going to be, making times three of whatever it is I'm risking. So since I'm risking $10, risking, since I'm risking $10, or I'll say since my risk is equal $10. Sorry, my risk is equal $10. Remember, that's what we're having here also, $10. That's what we're having here as well, $10. Since my risk is $10, my take profit is going to be my risk times 3. In this case, my risk is now $30. Are we getting how this thing is working? Please pay attention, because this is the mathematical aspect of the risk management. And we, as a trader, you need to know this. So what is the formula is that for each day I risk $10, I am to make $30. For each day I lost $10, my stop loss is $10. My take profit is supposed to get to this place, $30. Are we together now? So with this formula, you will be able to be a profitable trader. Now let's hop over to the calculator. So I'm going to be calculating this so you see what it looks like. All right. So you have $100 here, and you are trading for actually 10 days. So because that is actually 2 weeks. Remember, market opens on Monday and closes on Friday. So you are doing this real quick to your account. So you have 100, you divide it by 10. How many are you getting? If you divide 100 by 10, it's going to give you 10. So literally what this therefore means for you is that for each day you are going to be risking this $10. That's what it means. For each day you would be risking this $10. So hang on, I'm actually coming. Are we together? I'm actually coming. Now, another thing you should also look at is, since you're risking $10, it therefore means that in a day, this $10 you're risking is equivalent to, 10% of this money. So for, $100 you have, risking 10% each day is going to give you, $10. And now, for this $10, what this therefore means is that once you're through for the trading of that day, take for example, your trade actually hits stop loss on $10. It means you are not permitted to trade any longer again for that day. You have to wait till the following day. Why? Because you've crossed the threshold, the threshold, you know. But another thing we also look at here is, since you're risking $10, it therefore means now your risk to reward ratio is going to be 1:2. Yes, your risk to reward ratio is going to be 1:2 or 1:3. The reason why you do that is because for every $10 you lose, you're supposed to be making $20. So that's your risk to reward ratio of 1:2. It therefore means that if you're risking 10, which is 1, in terms of your ratio, 1:3, it means 10 times 3. So this is going to be giving you $30. So what therefore means is that for every $10 you risk, you're making $30. So the only two things you're going to be seeing in your chart is either a stop loss of $10 or you're seeing a take profit of $30. So what that therefore means is that you are still going to be in profit. Are we together now? depending on whatsoever currency pair you're using and whatever strategy you're using, you should be able. So let's assume for a 10-day, we calculated 10 days, and now you are able to say, out of that 10 days, let's say in 6 days, you were able to make, your trader was actually able to hit a take profit of 30. So this will now be times 30. Sorry, that's for your 6 days, it's going to be times 30, and this is giving you 180. Mind you, hold on, don't be in a haste, that this is for 6 days. And let's assume the remaining 4 days, that is making it 10 days, your trade was able to hit stop loss. What that is going to be, remember we have 180 here, it's going to be 10 times 4 extra days. So you're losing $40. Are we together? And you are making over a $180. So what that therefore means is that, let's take for example, you're losing $40 on 4 days, and in 6 days you're making $180. Are you seeing how the difference is? So let's take the difference of that now. What is that actually pulling through? Let's take for example, you're able to make, out of 10 days trading, you're able to even make 7 days. Let's say 7 days for example, and you're able to make $30 in 7 days. This is already $210, way beyond your capital. And in 3 days time, or your in 3 other separate days, your trade was able to hit a stop loss. So times 3, it means you lose $30. So in these 3 days you lose, your capital is still intact and you're still profitable as a trader. Are you seeing how this thing works? Now let's also go back to this place now, where we have, for example, you're able to, let's say you have 10, let's say for example now you were able to lose out 5 days. You're able to lose out 5 days. Now your take profit, which is $30, you're able to make, even if it is 4 days you're able to make $120, and you lose 6 days. So the number of days you lose are actually more than the days you profited. So you are having 10 times 6 days is giving you $60. So you lose $60 out of your $100, and in the space of that 10 days, you're able to make $120. Your profit is you're still profitable, and your capital is still very much intact. Are you seeing this? So what it means is that you have about $20 increase as a profit, whilst your capital is still there. So this is one of the ways in which you become a profitable trader, by being disciplined and also maintaining your risk management schedule. You are to place just one trade for the day. If you take profit, beautiful. If your trade hits stop loss, go and sleep or go and engage in something else. This is how you don't go ahead chasing the market. You allow the market comes to you, or come to you rather. Are we together now? All right, so let's take for example, you were able to perform your trade. Remember, if we're using our short or long position, remember what you're doing is 1:3. So this is actually what it is going to look like. Anything around here, this is just your sharp trade. So you're risking one. So here becomes your $10. Here becomes your take profit, which is going to give you your $30. Are we together? Let me indicate it so that we understand very well. So um yeah, or let me make it this way so you get to understand there. So we're having $10, and we are having also $30. So $30 is going to be here, while $10 is going to be here. So you risk here for $10 if you hit the stop loss, while your $30 becomes your take profit. All right, now we're still working. Now for let's assume in the number of days, which is 10 days, you were able to profit, let's say you're able to profit 7, you're able to profit 6 days out of the 10 days. What this therefore means is that you're going to be having for profit to, or let's say to make it much more easier, take profit. You're able to take profit for 6 days. Hmm? You took profit for 6 days. Now this is going to be $10 times 6. Are you seeing that now? It's $10 times 6. So you already know what that calculation is going to be. So $10, oh sorry, $30 times 6. That's what we're working with here. Sorry, $30 times 6. That is actually giving us $180. Very sharp. So we're having $180 here. $180. $180. And now let's assume your stop loss, your SF was able to hit your SL was for, let's say, for 4 days, which made it 10 days. 10 days would now become 10 times 4, which is now going to be equal 40. So you now see, if you now go ahead and take the difference, you see that out of that 10 days you profited 6 days, which is $180, and you lost $40. Are you still not on profit from this, margin? You're still on profit, and this has nothing to even do with your capital, because your trading capital is still intact. Over 180, you are still having your trading capital of 100. So you are increased by 80%. Sorry, by $80. So the same thing continues. If let's assume you had, let's just assume that what you had here, your take profit was for, let's assume was for even for 4 days. It will now be 30 times 4. This will now be 120. So since this is 120 now, if you take this 120 and your stop loss happen to hit, remember your stop loss was able to hit, let's say 6 days, and this is $60. Can you still see that you're still on profit from what we've calculated? You can see you're still on profit because your trading capital is still remaining $100, and you are increased by $20, and yet you lose out 6 consecutive days out of these 10 days. You only profited, 4 days. You've made $20. So pretty much this is how you keep moving. There is no way you would say you're going to make lesser if out of 10 days you're not going to make profit in, you're not going to make even up to 2 to 3 days. If that is your case, then the strategy you're using is wrong. You have to change strategy, and you need to watch a couple of videos. I'm going to be leaving some videos at the end of this particular one. You need to go through that video. It's going to help you in terms of technical analysis and strategies. So this is a pure risk management, and with this you just know that you'll be a profitable trader. Now your profit margin might be not too, it might not be in volume, but at least it comes in little. And by so doing, you're being stable and consistent in whatever you're doing. You become a very good profitable trader. So I believe this video has actually helped you. If you're tuning in for the first time, do well to hit the subscribe button, turn on the notification bell, and so you would be notified whenever we drop another video to help your entire trading experience. If you want to be part of our community, do well to use the link right in the description. Remember, we are not a financial advisor. We don't we're not going to send you mails or messages for you to send us money. We don't need that. Please, in case you have anyone using our name to impersonate, just know that it's a scam. We are not going to ask you for any money whatsoever. Are we together? So please take your time. You could go through the channel and watch other videos to also help your trading experience. I think I'm going to be seeing you in the next video. Bye for now.